Good evening, everyone. Welcome back to this discussion on audit. So today we plan to continue our discussion on the audit reports. Yeah. So in the previous sessions, we have talked about audit reports, whether that is modified or that is unmodified, plus various elements which are there in the audit report, including some of the important things like CAM, for example. Okay. Emphasis of matter, other matter paragraph, and there are various other sections. Yeah. So all of those things we have discussed. Along with that, we have also discussed some other requirements which were in relation to branch audit. Okay. Yeah. So today we plan to move further in terms of our discussion. Okay. But of course, we'll just stay around the audit report only. So there are few elements of the audit that we need to cover, plus few elements of the audit report that we need to cover. Okay, so both these things we plan to cover today. Along with that, we'll also look at some examples. Some of the examples we have already covered as around some of the topics that we have discussed, but you can say it's more of revisionary. Okay, sort of that we plan to cover today. Yeah. All right. So now, quickly, if one has to do a recap in terms of various things that we have covered. Yeah. So I think it will be great if you can just keep answering some of the questions. Yeah, because that is very, very important. And we have discussed that in this particular chapter, if you ask me, the most important aspect will be around the modifications, will be around the EUM or for example, CAM. Yeah, so these are some of the areas which I believe are more important as compared to any other area. Okay, so now, quickly, can you tell me when do we bring in a modification in the audit report? Over to you, quickly. Everyone, when do we bring in a modification in the audit report? Yes, over to you. Quickly, we have modification in the audit report. Great. Sukhveer says when there is any misstatement. Yeah, but please remember it has to be material misstatement. Yeah, like Shini mentioned. Plus, that could also be caused by some insufficient data. Yeah, great. Now, if let's suppose everything is all right as far as the audit of financial statements is concerned, but there is any specific matter which the auditor wants to highlight. Okay. Now, what are the ways through which that matter can be highlighted by the auditor in his audit report? Tell me, what are the ways? Okay, very good. Hardik says there are two ways you can do this. One, emphasis of matter, and second is other matter paragraph. Correct? So these are the two ways which are available to you. Okay, now tell me one thing. What is the importance of CAM? Why do you think CAM is required? Over to you, quickly. CAM, which is one of the sections in the audit report, key audit matters. What do you think is the relevance? Why is that at all required? Huh? What is the need for this? Okay, Srini says communication is the key. So, what do you mean? What do you mean by communication is the key? Hardik says those items which are quite significant as per the judgment of the auditor. Pallavi says it's all about highlighting the matter. So, are you trying to say that it's similar to EM or other matter paragraph? Is it? Okay, Sukhveer says if there are some significant items, significant areas which the auditor has gone through during the course of audit, over which there are no concerns as such. Yeah, but still, the user should understand as to what were the challenges which the auditor has faced. So, what are the ways through which auditor will do this? That is through this CAM, key audit matter, right? Okay, now, can you tell me if there is a CAM in the audit report, so what are the requirements as far as its coverage? Okay, so when you include CAM, so what all things in the CAM you will include? Tell me. So while giving CAM, what are the things you will have to take care? Means what all things you will include under CAM? Okay, great. Hardik says why, how, and disclosure. Okay, Sania says it's not a modification. No, so I'm saying that if you include CAM, what are going to be the sections within this CAM in a way? Means what all things you will cover within CAM. I'm not talking about the specific areas. I'm saying that this is the requirement for a CAM to be having always. Huh? Okay, Tambeshwari says why, how, and disclose. Okay, anyone else? What do you mean by this disclose? Gurminder says original information, professional judgment, key observations. So one will be why this particular matter is a CAM. Okay, so that is going to be the first thing. Second, how was that matter addressed by the auditor? Means what all audit procedures have been performed by the auditor. Okay, something which Nitin also mentioned just now. And third, again, it will have reference to something in the financial statements, be it a note or be it any other thing which is there in the financial statement, because over which audit procedures would have been performed, in respect of which CAM would have been given. Correct? Yeah. So now these are some of the things that you will always find in respect of a CAM. Okay. Now, moving further, now we will talk about another area in the audit report, or you can say in respect of audit. And this is not really relevant as far as sections of the audit report is concerned. So what I mean to say is that this is not really one of the sections of the audit report, okay, or this is not something which is a part of the audit report, but this is how audit reports may also be required to be laid out, or this is how audits are also required to be performed. So then in that context, okay, so this is something which is important for one to understand. Now this is called as joint audit. Yeah, so this concept is all about joint audit. Yeah, so I think Shini is looking for something on SA 710. Yeah, sure. So we'll touch upon that part. Yeah, maybe towards the end of the session. Okay. All right. So now, when you talk about joint audit, so let's try to understand as to what does it mean. Means what is joint audit? Why is it required? Or in what situations you will have a joint audit? Now, joint audit, as the terminology says, joint audit is all about what? Joint audit is all about doing the audit in a joint manner. Yes or no? Yeah. So it's all about doing the audit in a joint manner. So that's what the joint audit says. Now, in respect of joint audit, you can say, if we take an example of a company, say there is a company P Limited, okay, whose audit is required to be performed. Yeah, so let's suppose its statutory audit is required to be performed. Now, for the statutory audit, something that we have discussed quite a lot is through the audit. Sorry, is through an audit firm. Yeah. So let's suppose A and company is a firm of chartered accountants. Yeah. Who will perform this audit? Correct. Now, for this audit, at times, what a company may do is P Limited. Instead of having only one auditor, they may want to appoint two auditors. So let's suppose there's another firm, and we are not talking about a branch of A and company. We are talking about another independent audit firm or auditor. Okay. Now, in respect of audit of P Limited, there are going to be two auditors. Yeah. So both of them will perform this audit. So this audit will not be performed by only one auditor. Two auditors will perform this work. Or you can say two audit firms will be engaged for this audit process. Yeah. So now, in this case, the question arises that if let's suppose two auditors will be engaged. Okay. So does it mean that both of them will perform the entire audit? Means, will it be a kind of duplication by both the parties in respect of each and every area? Number one. Number two, why is this required to be done? How does this help the company? Means, how does this help P Limited? Further, how does this help the auditor? Yeah, because if the auditor is performing the audit in a joint manner, so how are all of these parties going to get benefited? Plus, we also need to understand that how this audit process is going to be benefited, because eventually this audit process has to be carried out in an efficient manner. That's the objective. Yeah. Now, as regards the objective of the audit, what was the objective of the audit? To express an opinion on the financial statements, whether the financial statements give a true and fair view or not. Now, if it's a case of joint audit, so will this objective change? The answer is no. So that objective will remain same. Okay. So that means all those requirements, all those objectives will remain same. Yeah. So this is not going to change. So that means both these firms will have to take care that this is the objective towards which they need to work, or that's the goal that they need to achieve. Yeah. All right. So now, in respect of this, now, why is this joint audit required? See, at times, a company may be too large to be handled by one firm of chartered accountants, or you can say one audit firm or one auditor. It may be too large. Huh? Let's suppose this company has got hundreds of branches. Okay? There are so many branches of this company. Now, if this company has got significant operations, it's quite significant in size in terms of its operations. It's quite spread out. But at the same time, there are two things which this company wants to achieve. Of course, audit is the objective. There are two things which this company wants to achieve. What are those two things? One, that the quality of audit should not suffer. Okay, so that's the first thing. Second, timeline. Okay, let's suppose this company is targeting that this entire audit should get completed, say, within a month. Okay, every company will have some timelines, some deadlines, some targets. Yes. So now, if these two are the cases, then one of the ways to achieve this objective by the company, wherein the quality of the work is not suffered and the timelines are also met, is to distribute the work. Yes or no? Yeah. So instead of appointing only one person for this entire work, what can this company do? Company can distribute this work. amongst two parties, amongst two auditors. Okay. If that is done, then what will happen? One, both the firms will come, so there will be a pooling of resources. Why? Because the resources will come from A and company as well as B and company. Yes or no? And they are working towards a single objective. Correct? They are working towards a single objective. So definitely there will be a pooling of resources. At the same time, each and every firm, and in fact, this is something which also applies to every person. Every person has got some expertise. Or you can say that every person will not have every expertise. Yes or no? Yes or no? Every time, every person may not have every expertise. Correct? Yeah. So it may happen that their expertise in respect of the areas which they have been working on is required, or maybe significant experience is required from two persons because things are going to be complex considering the size and the way the operations are spread out. Yeah. So that expertise can again be brought together through this process. Okay. And of course, idea is what? To distribute the work. Idea is to distribute the work. So therefore, there will be a sharing of the total work, which means duplication should not arise. Because if the duplication will arise, then what will happen? This quality may remain intact, but this timeline may suffer. Yes or no? Because if both the firms will do the same thing, yeah, let's suppose PP is covered by A and company, and B and company also wants to cover PP, then what will happen? Of course, they will spend more time as compared to what is required. Correct? Yeah. So this is something which they will always plan to achieve. Correct? Now, in this case, whenever a joint audit is performed, to begin with, what will happen? So when you appoint an auditor, I'm just talking about the appointment of the auditor. When you reach out to the auditor is getting appointed. So what is the first thing that should be in place before the commencement of the audit? Tell me, what should be the first thing which should be there before the audit is started? Over to you. Any thoughts? Any thoughts quickly? Very good. Hardik says engagement letter. Engagement letter. Yeah, that's the most important thing. So before the audit will commence, what should be there? There should be an engagement letter. Yeah. And what do you mean by engagement letter? Can you please tell me? What is the meaning of an engagement letter? What do you mean by that? Anyone? Any thoughts? Quickly. What do you mean by engagement letter? Over to you quickly. What is the meaning of engagement letter? Great. Preeti says it's the contract between the auditor and the client. Exactly. Yeah. So it is nothing but a contract or an agreement to which the terminology is engagement letter. Yeah. So that's the term that you use for engagement, agreement. Now, in this agreement, the scope of work of the auditor is defined. Why? Because whatever work is required to be performed by the auditor, that is something both the parties should agree. That's why the auditor has been appointed. Yes or no? Yeah, yes or no? Now, when it comes to two persons, A and B, who have been assigned the same task, what is the same task? Statutory audit. Okay. So if let's suppose you appoint two persons and you ask them to perform statutory audit, so what will happen? Tell me. There will be a confusion. There will be a confusion, significant confusion. And what is going to be the confusion? That A will think I'll have to perform statutory audit, so I'll have to do everything. B will think I'll have to perform statutory audit, so I'll have to do everything. So that's why the engagement letter will set out the roles, responsibilities, the work which is assigned to both these firms. Okay. In a way that there is a division of work. In a way that there is a division of work. Now, how is that going to help the auditor as well as the auditee? As we discussed, there will be sharing of expertise. If there are any complex areas wherein one of the auditor may feel uncomfortable, so many times if you struggle anywhere, or if you feel there is some need to get some guidance, so what do? You reach out to another person, correct? But in this case, the another person is always available. Yeah, because they have the collective responsibility to express an opinion. So that's why they can always consult with each other, because there's going to be a division of work. So entire audit will not be performed by one firm, and there should not be any duplication. So that's why workload of auditing the complete set is now reduced. Yes or no? Yeah. So that workload is now reduced. So this workload is also reduced. Of course, better quality will be there, because if the workload is reduced, expertise has increased, you have got people to consult, and the timeline is again something which you can manage, then the quality will definitely be improved. Correct? Further, when the workload will be lower, so of course the costs will be lower for both the firms in respect of staff, in respect of various other things. At the same time, because two firms are working together. Okay. Now, this is again very, very important. And we can look at it from commercial perspective also. Now, these two firms are what? They are service providers. So, can you not say that auditor is also a service provider? Tell me. Yeah. Auditor is also a service provider. Yes or no? Yeah. So, if you have two service providers who have been engaged by the same company to provide same set of services, even though the responsibilities are defined and distributed, but there will always be a good sense of, or you can say there will always be a healthy competition. Yes or no? Yeah. Which will again lead to what? Which will again lead to better quality. Yes or no? Yeah. All right. So then I think there are some questions. I think I missed out some questions. I would request you to please repeat. Okay, so got this, huh? So Preeti is asking, sir, who will assign or divide the work to the auditors? So it's the management which will do that, because the company is appointing two persons. Okay. So the company will decide that A will do this work, B will do this work. And the company will have to ensure that the entire work gets completed. So it should not happen that out of 100, 40 activities are allocated to A, 55 to B, and 5 are left out. No. So that is something they will have to mutually agree. Yeah. Kasak says it means the company will decide the areas to be audited by the particular auditor in the engagement letter. Yes. Yes. But the auditors, both the auditors need to ensure that they have taken care of everything in a joint manner. Okay. So they need to ensure that before the audit, whether that work is done by A or B, the work should get completed. Yeah. So it should not happen that if, let's suppose, 95% of areas are allocated and 5 are left out. So both are thinking, no, we will not care about it. Why? Because eventually they have to express an opinion. Okay. So Shrini is asking, in this case, multiple engagement letters will be issued by the company to the auditors. So it's not multiple. There are two, company and A, company and B. Yeah. All right. So any more questions on this? No? Clear so far? Aditya is asking, sir, what about payment? What will be the ratio? So that will again be dependent. See, payment will be dependent on the scope of work. So it will not always be equal. Again, dependent on the scope of work. Yeah. Even if you say the areas are equal, still the fee could be different. Yeah. So if let's suppose you go engage some service provider. So two service providers can always have different fees. They can have different charges. So it doesn't matter. Okay. So to say that they will always be charging equal amount may not be true. So they can always have differences in terms of the fees they are charging. Okay. Tambeshwari is asking, practice auditor is due. Sorry, I think I'm unable to understand Tambeshwari. Maybe you can just repeat. What is it you are trying to convey? Okay. Okay. All right. So let's move further. Now, see, everything has some pros and cons. Yes or no? So even though there are certain advantages, there can always be some disadvantages of joint audit. Yes, Srini, you're right. Yeah, so this can always be a combination of a large firm and small firm, or maybe two large firms, or maybe two small firms. Yeah, so this combination is always possible. Okay. Now this joint audit. Now I think before we get on to the disadvantages, this joint audit is something which you very commonly find in case of PSUs, or you can say the government organizations. Yeah, so therein it's quite common. Okay, so that is one. Because it's also something which is a regulatory requirement. Yeah, and there again, the reasons are same. So some of the reasons, like we discussed, they are same. And if you remember, we talked about branch audit. Remember, a company can have various branches, wherein the branches are audited by the branch auditors and head office is audited by the another auditor. Yeah. Plus, there can always be situations that if let's suppose there are no branches or head office, but there is only one company, and this entire company is audited by two auditors. So that precisely is more about the joint audit. Okay. Now, let's try to understand as to what could be the disadvantages. No, Hardik, principal and component auditor, we can say is slightly different. Okay, so we are talking about an audit situation wherein there is a company which has appointed two auditors. Okay, so if you say there is a company which has appointed one auditor for one branch, or maybe three branches, and one auditor for the corporate office, so that is going to be a different situation. So we are talking about a situation wherein they are appointed for company and not really for only the branches. So that's the case, which will, I think that is something you should more associate more with that type of situation rather than head office and branch office. Okay. Yes. Okay. So now one of the disadvantage for the auditors will be what? That if one was performing the entire work, he would have got entire amount. Now they are getting the fee shared. If you look at it from the perspective of the company, because they are engaging two parties, so it may happen that their cost has increased as compared to the situation wherein they only engage one party. Okay. Yeah. So for both, this could be a sort of disadvantage at times. Psychological problems may arise where the firms of different standing are associated in the joint audit. General superiority complex of some auditors, problem of coordination, areas of work of common concern, uncertainty about liability for the work done. Now, this is something I would say is a very common problem at times. At the same time, this could also have some repercussions on the audit which is getting delivered. So let's try to understand. So let's suppose there are two firms, huh? A and company, B and company. Okay. Now, let's suppose there's a particular matter which is required to be dealt with. Okay. So now, eventually, because both of them are going to sign the financial statements and both of them are going to opine on same set. So even if their work areas are divided, but the financial statements on which they are going to give the opinion is one. Yes or no? So that's why there can always be some areas over which they would want to have a consensus, over which they would want to have a joint look. Now, at times, it may happen that in respect of some of these areas, their views are different. Yeah, so there's a difference of opinion. So, what do you do in that situation? So, when you talk about an audit, there can always be a difference between the management and the auditor. And now you have two auditors in place. So, let's try to understand. So, this sort of complexity may arise. At times, what may happen is, let's suppose B and company is a big firm. Okay, it's a large firm in terms of size or maybe the expertise. Okay, and A is not that large. Yeah, so that superiority complex in terms of the two firms we discussed, that because their areas are divided, so at times there could be some uncertainty. A may think that all the areas assigned to A are completed. Let's suppose 45 areas out of 100. B may think, okay, 50 are allocated, so those are completed. Yeah, so what about 5? Which both of them should have taken care of. Why? Because eventually, for auditing the financial statements, out of 100, 100 should have been looked at. Yes or no? Yeah. So these sort of situations, problems may arise. So it's not that it will always arise, but of course, there's a possibility. So this can always happen. So that's why one should always be looking at that so that these concerns do not arise. Okay. Yeah. So this is again one of the things which is required to be looked at, evaluated by the auditors as well as the company. Okay. Yes, Hardik. All right. So now moving further. Now we have this auditing standard, okay, as around the joint audit also. So there are a lot of things as around the audit that we have already talked about. But let's look at some of the other things which are also required to be covered by the audit standard as far as the joint audit is concerned. Okay. Shini, I'll come to this point as around the audit report. I'll come to this point. Okay. Now, this auditing standard says the engagement partner and other key members of the engagement team from both the audit firms, means from both the sides, should be involved in planning. Okay, now one has to always understand, like we just discussed, see whether it is A and company or B and company doing their respective areas, eventually set of financial statements is what? That is not divided. financial statement will always remain one. Yes or no? So that's why a proper planning, like we discussed, is also required in case of joint audit. And some of the disadvantages, some of the areas of concern which we discussed can always arise, can be avoided when the planning goes fine. Okay, when the planning goes well. So that's why planning will play a very, very important role in case of joint audit. And for that to happen, it is important that both of them sit together. Means they come together, they discuss the things together, they plan together. So they may always plan their work areas independently, but eventually they should also keep sharing as to what is it that they have been doing. Yeah. So what are their objectives? What are the significant risk areas they have looked at? So that the other person can also be taking care of that. Because in the financial statements, there are a lot of things which are interlinked. Yes or no? Yeah. In the financial statements, a lot of things are interlinked. So one cannot say that you can just simply divide a financial statement into two parts and do the audit. That is not easy for anyone to follow. Correct? So their audit strategy, as we discussed, has to be very, very clear. And this audit strategy has to be for the financial statements as a whole. Okay. Now, joint auditors should discuss and develop a joint audit plan before they commence the audit. And for developing this joint plan, what do they do? One, identify the division of audit areas so that there is no confusion later on. Plus, there is no duplication. Plus, common audit areas. So, some of the areas they can always consider will remain common, or that may have been decided will always remain common. Why? Because that is quite critical for the financial statements of the company, and that's why both of them may want to have a look at that. Okay. So this part, this clarity has to be there. And when will this clarity be decided? Of course, that will there in the engagement letter for sure. But eventually one will have to plan. Yeah, because after the engagement letter, you will not say that everything is there in the engagement letter. So planning has to be done. Okay. So during the course of planning, this becomes a very important exercise. Okay. Ascertain the reporting objectives, of course. Consider and communicate among all the joint auditors the factors that are significant. Means what are going to be the significant risk areas, what are going to be the significant account balances, what are going to be the fraud risk areas, okay, what are going to be insignificant risk areas. Yeah, because accordingly the audit procedures can be planned. Yeah. Now, if let's suppose A and company is handling payroll, okay, and let's suppose B and company is handling PPE, okay. If B and company has considered PPE to be a significant risk area, okay, so it becomes important for B and company to update A and company. Why? Because this audit approach has to be looked at on a joint basis, means by taking the financial statements as a whole. So it's like two parties planned together, decided something together, and then they are dividing the work. Understood? Consider the results of preliminary engagement activities. Ascertain the nature, timing, extent of necessary resources to accomplish the engagement. Of course, this is all part of planning. Yeah, always a part of planning. As around the risk assessment, I think we already talked about it. Okay, what are going to be the common areas? What are going to be the specific areas? Okay, engagement letter, very, very important for both of them to look at. Work allocation, very, very important for both of them to look at, to consider. Yeah. Okay, now, in respect of the audit work divided amongst the joint auditors, each joint auditor shall be responsible only for work allocated to such joint auditor. Now, this is very important. Why? Because we need to understand what is going to be the liability of the joint audit. Now, they are going to be responsible only for the work allocated to them. Okay. At the same time, all the joint auditor, irrespective of what work areas are allocated to them, they will be jointly and severally responsible for audit work which is not divided and is carried out by all, of course. Yeah. Decisions taken by all the joint auditors under audit planning in respect of common audit areas, matters which are brought to the notice of joint auditors by any of them, and there's an agreement among the joint auditors on such matters, examining that the financial statements of the entity comply with the requirements of relevant statutes. Why? Because financial statements will eventually be one, presentation and disclosure of financial statements. For example, all the disclosures are covered therein or not. Whether that is meeting the presentation criteria of Schedule 3 or not. Ensuring that the audit report complies with the requirements of relevant statutes, auditing standards. Yeah. So some of the basic aspects which goes into the audit of a financial statements. Okay. All of those things are required to be looked at by the joint auditors. Yeah. So that is very, very important for them to consider. Now, as around this, let me just also get on to one more point. Yeah, so just give me a minute. Let me just go to that document. All right, so now, as regards the reporting requirement, in case a joint auditor comes across matters which are relevant to areas of responsibility of other joint auditors. Why? Because when the audit is going on, so maybe A and company has come across anything, any information, any data, any working which he believes is very, very important. But that is not going to be covered by end company. But he can always come across that information. Yeah. So what does he need to do? He needs to reach out to B end company. Okay. Yeah. Okay. Now, when the reporting is done, so what is going to be the reporting requirement? They are required to issue common audit report. Of course, the report will always be common. Why? Because it's one set of financial statements. However, at times they may be disagreeing with regard to the opinion or any matter. Of course, that matter has to be quite significant. In which case, they shall express their opinion in a separate audit report. In such circumstances, audit reports issued by the joint auditors, let's suppose there are two, so two audit reports which are issued, shall make a reference to each other's auditor's report. Okay. Now, generally, you don't get to see this happening. Generally, practically, you get to see one audit report is issued by the joint auditors. But at times, it may happen that there's some disconnect because of which they don't want to come to maybe some sort of agreement. and eventually two reports are issued. So they will have to give the reference. So when they give the reference, so they will clarify, yeah, so other party has done this, this is something which we have done, so this is our opinion, this is that opinion, and this is also audited by another auditor, this is also audited by another auditor. So that's sort of the reference, so that the users can get to know when they look at the audit report that they need to look at two audit reports. Okay, when they get onto the financial statements and they want to understand that this is audited, so they will have to get onto both of that. Yeah, so that is how they are required to look at it. Understood? Understood, everyone? Clear on this? Okay, Srini is asking, sir, can you please give an example on the circumstances over which separate audit report could be issued? See, the circumstances could be most likely wherein one of the auditor believes there is a material misstatement. Now, why there is a material misstatement? Say there is a particular matter over which the way accounting has been done. Okay, of course, it will be a matter of judgment, because if it's a matter of fact, then the difference of opinion is not going to be there. Yeah, because that's going to be very, very challenging to say why there is a difference of opinion. So, when do you have difference of opinion? When there is any matter over which judgment is required. Maybe some estimates are involved. Maybe some matter is involved which requires some sort of significant judgments to be taken. Say it's a complex matter over which uh, assessment or interpretation was involved. Yeah. Now, in which case, view of two auditors are different. Okay. And the matter is such that this can cause material misstatement. Okay, or you can say the matter is quite material as far as materiality of the company is concerned. Yeah, so I would say that this will be the matter wherein they will want to get into expressing different opinion. Otherwise, what will happen? Otherwise, they will have same type of opinion, isn't it? Yes or no? So I would say this is one of the areas wherein some sort of complexity or disconnect can arise. Otherwise, practically, you'll see that they would want to agree on this. Yeah, because of course, some amicable decisions are taken basis discussions, because whenever these situations will arise, okay, so it's not only about two auditors taking the decision. There's always a management. They would also want to, sort of explain or sort of bring them to same sort of conclusion, so that this sort of situation can be avoided. Yeah, so there is always one party who's going to help this entire process. Yeah, so Shini is saying in case one auditor is saying there's a qualification. Yeah, so that's what I told you, huh? So in that case, what will happen? They will have a difference of opinion, so that's why they will want to issue the different audit reports. And that's where when you will give one, other one will have to give the reference of other one. Okay, so that's how it will have to work. Okay, I've never practically seen such reports, but I'll just try to look at maybe a bit more if there's any. As I told you, practically some of these situations are going to be rare. Yeah, why? Because there's always a management, and practically what happens is when some of these matters will come up, so they will always be discussed, and management may agree on some of the points. One of the auditors may agree on some of the points. So that's how they reach the settlement, so that some of these type of situations can be avoided, because this doesn't go well. So if let's suppose you are the users of the financial statements and you look at these two audit reports wherein there's a disconnect, okay, so it doesn't go well with the stakeholders. So that's why you will generally not get to see such type of things. Okay, yeah, clear? Any more questions? Any doubts? If you have, quickly, then we'll move on to another requirement of the audit. See, if you look at this particular aspect, this was more about the audit. Okay, of course, we touched upon some of the things related to audit report as well, but this was more about, you can say, a type of audit. Yes or no? Yeah. Okay, so then I think we can move further. Correct? Okay, so now what I will do is I'll move on to the audit report. Once again, I'll get on to the audit report. Okay, so I can see some queries coming up. Great, just give me a minute. Huh? Okay, Tambeshri is asking. So note is written that essay 299. Okay, so what is the question? Huh? So I can see that note is written. What is the question? Tell me, Tambeshri. Quickly, huh? Any questions on that note? Quickly. Sania is asking what is the common management representation letter? See, representation letter will be obtained by both. Yeah. So this management representation letter should be on the financial statements. So that is something which will go to both the parties, means both A and company as well as B and company. Okay. Okay. So now Tambechuri is asking, what is this note all about? Okay. So I think this is the note you are referring to. Yeah. This is the note you are referring to. Is that correct, Tambeshuri? Are you referring to this? Yeah. Tell me. Okay. So now, see, for various areas that we are just trying to cover, you will find various auditing standards. Of course, we are also discussing all of these things from the auditing standards only. Yeah. But entire auditing standard is not getting covered. Yeah. You look joint audit, for example, say the auditing standard is running into 7 pages. Example. Huh? So maybe currently in the study material, 4 pages have been covered. Yeah, because at your level, that is considered to be sufficient. So that note says that if you want a detailed knowledge of the subject, okay, which is not really required from examination perspective, but for your knowledge, then you should also go read this auditing standard. Further, I would add to this. So whether that is required in the exam or not, whether that is already covered in your study material or not, still you can say that is like bare act. Okay, for example, under tax, under Companies Act, what do you get to see? There's a bare act. Yeah. So this auditing standard, till the time you don't read, you will not be able to appreciate some of those requirements. You will not be able to understand as to how to read that, because book is going to be different. Book can explain a lot of things which are involved there. Yeah, so for your knowledge, for your understanding, because tomorrow when you become a chartered accountant, when you start using some of these standards, you'll have to go refer the standards only. Yeah, so that at that point in time, you'll not go to a lot of books or these study materials, isn't it? So that is the purpose of that. Understood? Yeah, clear? Any more questions now? Yeah, clear? All right, so now moving further. So in the audit report, there was one section, other legal requirements. You remember? Which we skipped. Okay. And that was postponed. So now what we will do is we will move on to that section. Okay. So now just to quickly take you through, we had this subject, etc., opinion. Then there was CAM, basis for opinion. And if there is any sort of emphasis of matter, that will be there. Other information will be there. Then you will have management's responsibilities. Then you will have auditor's responsibilities. Correct? Yeah. So after all of this, what do you get to see? You get to see one section which talks about report on other legal and regulatory requirements. So let's try to understand this. So what is this report on other legal and regulatory requirements section of the audit report? Okay, so this is the section of the audit report. Now, this section of the audit report comes from some legal and regulatory requirements. Okay, means if let's suppose Companies Act has a section which requires auditor to do something and then report on that, or which requires auditor to perform audit in respect of a particular matter. Yeah. So all of those legal and regulatory requirements, because they are specifically covered by any act or any statute, and even if those areas would have already been covered by the auditor anyways. Now, very, very important point. Even if that area would have been covered by the auditor anyways. Anyways means even if this regulatory requirement would not have asked the auditor to perform, auditor would have performed that. Why? Because audit cannot be complete till the time you are not performing all the areas, performing the audit on all the areas. Still, because it's a specific legal requirement, so that's why auditor is required to comment on those areas specifically in this particular section in the audit report. Now, here again, if those sections are specifically commented upon by the auditor, it doesn't mean that auditor is giving any separate opinion on those matters. Yes or no? Yes or no? Why? Because these are some specific requirements, but these specific requirements are in the context of what? Audit of financial statements of the company only. Okay, audit of financial statements of the company only. Yeah, so that's the specific requirement which the report requires you to look at. Now, one such specific requirement comes under section 143 subsection 11 of the Companies Act. Okay, wherein you can say a kind of checklist is given. So it's a kind of checklist. And that checklist talks about various areas in respect of audit of financial statements of companies on which auditor is required to perform certain specific audit procedures. If the auditor has already performed those audit procedures, that's good. If that has not been done, then this checklist requires. Now, this kind of checklist, I'm using the term checklist. This is not really a checklist. I'm just using this term checklist for making you understand this in a better manner. Okay, so don't think it's a checklist. So this is called as CARO. Okay, so this is called as CARO. What is the name of this? CARO. What do you mean by CARO? What is the full form of CARO? Companies Auditors Report Order 2020. Okay, or the order. Now, this is the short form, or you can say the abbreviation which is used in the audit report. Now, we'll cover this CARO as well. Now, because this CARO, or you can say this checklist, covers a lot of areas for the auditor to cover. So that's why what the companies sorry, what the audit firms will generally do is they will give the reference of this Caro in their main report. You can say this report that we are looking at right now is the main report. So what they will do is in their main report, they will say that this Caro is dealt by them, covered by them in the form of annexure to this audit report. So can you see this? So they are saying that we means the auditor given annexure A. Now, what do you mean by this annexure A? This annexure A is all about taking care of all those requirements which are asked under CARO, okay, which are mentioned under CARO, under paragraph 3, paragraph 4 of CARO. Okay, yeah. Now, why is this given as a reference? Because otherwise, this main report will become too bulky. Yeah, so idea is to just divide the sections and take that particular section on a separate annexure. Now, that annexure is very much part of the main report only. So every time when you get to hear this term main report, what does it mean? That this is the main report. And of course, there are some annexures to that. Okay. You would have covered IFC, internal financial controls, audit of IFC. Yes or no? Yes or no? You would have covered that? You would have covered that? Yes or no? Now, you must also be knowing that on IFC, auditor is required to give a separate opinion. Correct? Auditor is required to give a separate opinion on IFC. Therefore, on IFC, what the auditor will do is auditor will include another annexure. See, the audit report has to be one, and this is going to be the main audit report. So, in the main audit report, auditor will also give a reference of that IFC report. That is again we'll look at. Okay, so that will also be one of the annexures to this main audit report. Yeah. Why? Because audit report, whether that is the main one or that covers CARO or whether that covers IFC, that should be all you interlink when you bring that together. If let's suppose CARO is given as a separate document somewhere else, which is not linked to the main report, IFC report is given somewhere else, which is not linked to the main report. So the user may not be able to relate to all of these documents and link all of these documents and then eventually reach to the conclusion or do his analysis on the basis of this combined reading of all the documents. Yeah, so that's why it's done. Understood? That's why it's done. Yeah. Now, this section, report on other legal and regulatory requirements, is not only about CARO. So CARO is only one of the points, okay, which will fall under this. And that again, we have parked. So we'll move on to CARO slightly later. Yeah. So let's try to also understand what are other areas are required to be covered under this particular section. Okay. Now, Shini is asking, sir, why was CARO introduced? Okay, then I think Hardik has a point. Then Shini is saying, okay, so I think that's repeated. Okay. I'll talk about CARO, right? Why was CARO introduced? What is the need for CARO? All of these things we'll discuss. Yeah, in fact, in CARO, there were some changes also. So we'll talk about CARO in detail. Yeah, so please hold your thoughts for some time. Let me just quickly run through some of these legal and regulatory requirements which are other than CARO first. Fine. Then, if you look at some of the legal requirements which comes from section 143 of the Companies Act. So what is it that the auditor is required to report on? Auditor is required to seek and obtain all the information and explanation to the best of his knowledge and belief for the purposes of audit. So that's why auditor is saying that whatever this Companies Act or this section required, I have done this. Okay. Yeah. So is this not otherwise required to be done? So let's suppose if this particular point is not mentioned, if you look at only this para, Do you think this information which is required to the best of his knowledge and belief, auditor would not have obtained this otherwise? If let's suppose this was not specified in a section of the Companies Act, do you think auditor would not have done this work? Tell me. Tell me. What do you think? Auditor would not have performed this work if this was not specifically specified in this particular section? Tell me. Would the auditor have covered this or not? As per the requirements of the auditing standards? Dilip says he would have done. Kasak says definitely auditor would have done this. Still, or you can say, even though auditor would have done this work, the regulator, or you can say the legal requirement, places this responsibility on the auditor to write this. Okay, to put this in writing that I have obtained the required information. So whatever was required to be obtained, I have obtained that. Okay. Why? Because it's a kind of responsibility which has been placed on that specifically. Okay. Clear? Further, he says that our opinion, proper books of accounts as required by the law have been kept by the company so far as it appears from our examination of those books, except for the matters which are stated in CAR. Sorry, which are stated below under Rule 11G of Companies Rules. So Rule 11G again we'll look at as to what are those matters. Okay. So the requirement is that he should obtain proper books of accounts. So auditor is giving this specific point that I have obtained whatever was required to be obtained. Fine. Then standalone balance sheet, standalone statement of profit and loss, standalone changes in equity, all of these things dealt with in this report are in agreement with the books of accounts. Now the law requires auditor to state, to confirm that whether the components of the financial statements they are aligned with the books of accounts or not. Do they tie to the books of accounts? It should not happen that financial statements are being prepared maybe from some other sources which is different from the books of accounts. Yeah. So is that possible? No, because otherwise auditor will not be able to complete the audit. But still, this is specifically required to be commented upon. Okay. Aforesaid financial statements comply with accounting standards. So of course, that's the primary requirement. So whenever financial statements will be prepared, what is the requirement? They should comply with the accounting standards. So auditor is required to comment on that. Okay. Further, it says, on the basis of written representations received from the directors of the company as on 1st April 2024 to 10th April, taken on record by the board of directors. Yeah. So auditor needs to ensure that the directors are not disqualified. So there's a section of the Companies Act which gives you situations under which they can be considered to be disqualified. Means they will not be allowed to act as directors. Now that's a legal requirement. We don't need to check when would they become disqualified, how do they become disqualified. Auditor needs to ensure. And how is that required to be ensured? By taking the self declaration from those directors. As on which date? As at the report date. So auditor has clarified that they have given the declaration on 1st April. Starting from 1st April to 10th April, these are the declarations they have shared. Okay. Then it says modifications relating to the maintenance of accounts, other matters connected therewith are stated in paragraph 2AB above on the reporting under section 143(3)B and paragraph 2BF. Okay, so anything if there was required, so he is giving the reference of that particular para. So we'll look at that para also. Then he says, with respect to the adequacy of IFC internal financial controls. Okay, refer to our separate report in Annexure B. Understood? Understood? Yeah. So again, Companies Act requires what? That the auditor has to provide opinion on IFC. And that's why auditor is clarifying that I am providing that opinion on IFC. But for that, refer another annexure. Okay, I am giving that in another annexure. Understood? Yeah. Everyone clear so far? Yeah. Okay. Now, there are further matters, okay, which are covered under Companies Audit and Auditors Rules 2014, something which has also been mentioned above. Remember 11G, all of those points were given, the were given, okay, for which the reference was given. So now auditor is commenting on all of those points. Now, where are these points coming from? All of these points are coming from the Companies Act, okay, the relevant section or the relevant rules. Now, in this case, auditor is saying, in our opinion, and to the best of our information and according to the explanations given to us, as required under Rule 11 of these rules, company has disclosed the impact of pending litigations as at 31st March. So if there are any pending litigations, company is required to disclose them. So auditor is saying, yes, those have been disclosed. Further, he is also giving the reference of that. So he is saying, go and refer note 19 to the financial statements. You will see that. Okay. Yeah. Shini is asking, sir, the annexure can be written representation from the management, right? No. See, management representation is a document which comes from the management to the audit. We are talking about the audit report here. Yeah. So various audit reports which are given by auditor to the auditee to the company. So we are talking about those reports here. Okay. Yeah. All right. So now moving further. Then there are some more legal requirements. So let's read through those requirements because auditor is specifically commenting on all of those points. Company did not have any long-term contracts, including derivative contracts, for which there were any material foreseeable losses. There has been no delay in transferring amounts required to be transferred to Investor Education and Protection Fund. Okay. Management has represented, as disclosed in note 21 as well, no funds have been advanced or loaned or invested, yeah, invested by the company to or in any other person or entity, including foreign entities, with the understanding, whether recorded in writing or otherwise, that the intermediary shall be directly or indirectly lend or invest in other persons. Okay. So there is some requirement in relation to lending some money. So now auditor is required to check that. So auditor is saying, I have done that. And this is something which is specified over here. Further, he says, in the same note 21 to the financial statements, no funds have been received by the company. So one is to lend and second is to receive. So on receiving funds, auditor is commenting again. Okay. Then he says, based on the audit procedures performed, nothing has come to our notice that has caused us to believe that the representations obtained in respect of funds lent or funds received contain any material misstatement. Means whether these matters contain any material misstatement. Okay. So that is not the case. Then he says, now these are all what? These are all specific requirements of the Companies Act. Okay. Please understand. Interim dividend declared and paid by the company during the year and until date of this audit report is in accordance with section 123 of the Companies Act. Final dividend paid during the year in respect of same declared for the previous years is in accordance with the Companies Act. Now, why is the auditor saying this? Because this is the requirement of that particular section. Auditor has to comment on that. Okay. Then He says, reporting under Rule 11G of companies rules. Okay, these are the rules. Is applicable from 1st April 2023. Based on our examination, which includes test check, except for the instances below, company has used accounting softwares for maintenance of books of accounts, which have a feature of recording audit trail or edit log. Means tomorrow, if there is any change in the books of accounts, that change should be captured. A log should be created for that. Yeah, history should be there. Yeah. And then, in respect of this particular feature, audit log, auditor is required to give some specific pointers. So he says, feature of recording audit trail log. This facility was not enabled at the database level to log any direct data changes. So he's saying there is some discrepancy, okay, which he is commenting on. Feature of recording audit trail facility was not enabled at the application layer. Okay, so this is again he's commenting on. Further, he says for the periods where audit trail log facility was enabled and operated throughout the year for the respective accounting software, we did not come across any instance wherein that feature has been tampered with. Means if that feature was in place, so that has been going in a smooth manner. Okay. Then he says, with respect to the matters to be included in the auditor's report under section 197. Now, what does it require? Section 197. He says the remuneration paid by the company to its directors. So it talks about managerial remuneration. Whether that is in accordance with provisions of section 197 or not. So he's saying yes. Now you don't need to compute managerial remuneration. Huh? Please remember. Huh? So in this particular section, you would have seen application of various legal requirements. Okay. And I'm sure you'll have a question in mind, sir. How do we get to know what is there in section 197? How do we get to know what is there in rule 11G? How do we get to know what is there in say section 143 or 123 or some of these sections? See, I'm sure you are also covering another subject, Companies Act. Yeah. So to a certain extent, you would have got the understanding about those sections from there. Plus, you will also get a feeler of what is required to be captured over there. Yeah. So that part is good enough. For you, currently, it's not required to deep dive into those sections. Of course, if you do that, that will be great for your knowledge. But for your purposes, as of now, you need to focus on the reporting requirement, not on that competition, because all of these things are required to be taken care of by whom? Management. And auditor needs to ensure whether the management has done that or not. Clear? Everyone clear on this? Yeah? Everyone clear on this? What is the role of the auditor here? Yeah? So auditor has to ensure whether that has been taken care of or not. Yeah? Clear? Any questions on this? Any questions? Okay, so now what I'll do is I'll just take you to first of all annexure B. I'll come to annexure A slightly later. Let's look at this annexure B. Now, if you look at this annexure B, and if you remember, this annexure B was all about IFC. Yes or no? Yeah. So with the main report, first of all, you will have annexures and then the financial statements will follow. Now, if you go and look at this annexure B, what does it read? It says annexure B to independent auditors report. So again, there is a reference of the main report. And then you have the header. Okay. Report on IFC with reference to the relevant section of the Companies Act. Further, it gives the reference of the main audit report, section of the main audit report. Now, please look at this, very, very important. So it says referred to in paragraph 2AG under section report on other legal and regulatory requirements of our report of E1 date. So what does it mean? So in this annexure, it's been referred, it's been mentioned that if you are reading this annexure, so this annexure has been referred in the main audit report. Yeah. So can you see there is a cross link? In the main audit report, you have a reference of annexure B. And in annexure B, again, they are telling you, if you go look at the main audit report, that is where this annexure B has been referred. Yeah. Can you understand the importance of the reference? Yeah. Now, this is going to help the user. Can you see this? Yes, everyone? Quickly? Yeah. So, this is again very, very important for you to look at, for you to understand, because only then the user will be able to draw references. Clear? Yeah. Okay. Now let's go to this annexure A. Okay. Now this annexure A, in a way, is what? This is nothing but one of the sections of the audit report. Yes or no? Yes or no? This annexure A is actually one of the sections of the audit report. But because the auditor found this particular area quite bulky. So that's why, what did he do? He created another document, or you can say an annexure, wherein all of these areas have been covered by the audit. Yeah. Look at annexure A or annexure B. They are forming part of the audit report only. They are in a way one of the sections of the audit report only, or you can say the main report only. Yeah. So can you now also understand why the main report is called as the main report and then the annexures? Yeah. Can you now understand that? Yeah. Okay. Yeah. Everyone clear? Any questions so far? Because then we'll move on to this Caro. Any questions so far? I can see this question coming from Sai. He's asking, sir, is year by year matter in the audit report may change? Yes, of course. See, your audit report will be on the financial statements of the company for that particular period. Yes or no? So when you move on to the next year, again another audit report will come. If that was to remain same, then why there is a need for audit year and year again? Yes or no? Yeah. So that has to change. Clear? Tambeshri is asking, annexure is a part of audit report. You tell me, should this be considered as a part of audit report or not? You tell me. What are your thoughts? Quickly, Tambeshwari, you tell me. Should we consider this? Yes, of course. Correct? Yeah. All right. Any more questions? No? Then I think we can take a break now. Okay. And after the break, we'll continue with our discussion. Okay. Because now we move on to Karo, which is going to be again very, very interesting part of the audit report. And you'll see a lot of things which you will otherwise also perform as far as audit is concerned. Okay. But let's continue on this after the break. Huh? Okay. So I think Manish, we can take a break now. Hi, welcome back. So now we'll move on to our next part that is about Caro. Okay. Now, Caro, we have discussed that it's one of the sections of the audit report in a way. And there are some pointers, or you can say there are some areas which are specified in Caro which the auditor needs to take care of. Means over which auditor is required to perform certain procedures plus comment upon those if those are applicable to the company. Okay. Now, this section, Caro, is not applicable to every company. So, what does it mean? That there is only a category of companies to which it would apply. Yeah. So, there are some specified companies over which Caro will apply. So, let's try to understand that. So, it says Caro applies to all companies except means some of the companies have been excluded from the scope of Caro, from the purview of Caro. What is that? Banking company, insurance company, Section 8 company, one person company, small company, and some private limited companies which are not a subsidiary or holding of a public company and which have a paid up capital and reserves and surplus not more than 1 crore rupees and which do not have total borrowings exceeding 1 crore rupees and which do not have revenue exceeding 10 crore rupees. Okay. So if there is any private limited company which will meet all of these criterias, then on such private limited company also Caro will not apply. So what does it mean? That if there is a public limited company, so Caro will always apply to that, except for these four situations that we talked about. Okay. Now, of course, that is a categorization. That is something which you need to understand. Now, the other question was that, sir, what is the need for Caro? I think the need for Caro we can understand once we go through all of those requirements of Caro. Okay, then I'll come to the need of Caro as well. Dipali is asking, sir, Caro is issued by the government. See, Caro, you can say, is a section of the Companies Act, or you can say there are some requirements of the Companies Act. Yeah. Over which auditor is required to comment upon. Yeah. So it's not something which is issued by government. It's something which is issued by the auditor. And I believe you have missed some part of the audit report discussion that we just had. Because therein we talked about it. That this annexure A, which is all about Caro, where does it come from? It comes from the audit report only. And in the audit report, where does it come from? It comes from the legal requirement which has been placed from Companies Act. Okay. Yeah. And who is giving this annexure or the main report or annexure A or B? It's all given by the auditor. It's all issued by the auditor to the company. Yeah. So it's all issued by the auditor. Means everywhere you have auditor. And we are only talking about those deliverables which are given by auditor to the company. Understood? Yeah. Okay. Now, Hardik is asking, sir, auditing standard section in law is what? If we want to quote, please tell. See, auditing standard section law, I couldn't understand. So, what do you mean by this? Uh, what do you mean by this? Auditing standard section. Tell me quickly. What do you mean by this? Yeah, so I'll just wait for response and then I'll move further. Yeah. Yeah, I'll come to your point. No worries. Okay, so like which section? Yeah, sure. See, all of these section number, etc. will come back. Yeah. Anyways, in the main audit report, you have that. Yeah. I'll come back to that. So let's now quickly go through some of these points. First point. Now, in this case, auditor is commenting upon this. But important part is to understand that what is it that the auditor is commenting upon. Okay. Because we are not going to the requirement. We are now looking at the audit report. So there's a difference between these two. One is the requirement. Now, in the audit report, auditor has dealt with that requirement and giving his response. Yeah. So why do I take up this report? Because this will give you more clarity as to how this has been addressed by the. Okay. Now, in this case, Aditya, I'll come to your point. I'll come to your point. Company has maintained proper records showing full particulars, including qualitative details, quantitative details and situation of PPE. Company has maintained proper records showing full particulars of intangible assets. Okay, so if you look at the first para of Caro, first para means there are various paras, or you can say there are various requirements. So the first requirement is in respect of PPE and intangible assets, wherein the auditor is required to check whether the company is maintaining all records for PPE or not, including their quantitative details. Where do you get the quantitative details for PPE? Can you tell me? If you were the auditor of a company, where do you go and check the quantitative details as well as situation of PPE? Can you tell me quickly which document you will refer for that? Very good. Ardik says notes to accounts. Tambeshwari says financial statements. Quickly, anyone else? Ritika says balance sheet. Okay. Do you see the quantity of PP in the balance sheet? Do you see the location of PP in the balance sheet? Yeah. So some of you are mentioning balance sheet, financial statements, notes to accounts. Have you ever seen any such thing in the financial statements? Shini says schedule of PP. So that is again a part of the financial statements only. Bhavna says AS10. So what do you mean by AS10? See, it is called as fixed assets register, which the company will maintain. In the fixed asset register, company maintains this information about the quantity of PPE. Means if the company has got laptop, 50 laptops are there, and where are they placed? Means what is the location of that? Okay, all of these details, records. Can you just look at each and every information in the financial statement? So do you think in the financial statement company will give a record of each and every asset? Tell me. Have you ever seen that? Yeah. So why are you giving this answer? Balance sheet, financial statements, notes to accounts, schedule of PPE, accounting standard? No. Yeah. So every time when you have a question, please apply your thoughts properly. That how can you check that? Understood? Now, one of the requirements under CARO is what? That the auditor should check this PP. Now, let's suppose if you were auditing the financial statements of a company on which CARO doesn't apply. Remember, we discussed that there are some companies on which CARO doesn't apply. Yeah. In that case, in that case, if you go and check PPE, will you not check the location of PPE in some of the cases? Will you not want to check the quantity of PPE on a test check basis? Tell me. Tell me, will you do that or not? Will you do that or not? Tell me, everyone. Palvi, Hardik, Ritika says, yes, we'll do that. Dipali says, we'll do that. Tameshwari says we'll do that. Now a question arises that if you would have done that anyways, then where would that requirement of performing that procedure comes from? Can you tell me? If you'll do that, so why would you do that? Where does that requirement come from? Because Caro is not applicable. So if let's suppose you'll do that, so why will you do that? Can you tell me quickly? Tell me quickly. Where does that requirement come from? Nancy says will do, Aditya says will do. Where does that come from? Quickly. Dilip says testing of assertions. It comes from auditing standards. Yes or no? It comes from auditing standards. Correct? Yeah. Now, similar to this point of PPE, there are a lot of points that we are going to cover under CARB. Yeah. But just because CARO is not applicable, so does it mean that you will leave all those areas or you will not perform those areas? The answer is no. You will still do that. Or you may want to do that, depending on, again, your audit planning. Correct? Now comes the question, I think, which one of you also asked me, then, sir, why there is a need for CARO? Okay, so if you would have done that anyways, if the auditing standards require you to do that, okay, as per your audit planning, if that will be a critical important area or whatever will be your assessment as far as audit procedures is concerned, if you would have done that anyways, then what is the need for CARO? Why does this require that particular procedure to be performed? So you can say that there are some important areas which regulation believes. Regulation means which the lawmakers believe are important in respect of audit of certain categories of companies. Okay. And which should not be skipped by the auditor. And even if whether that is skipped or not skipped by the auditor, irrespective of that fact, lawmakers want auditor to specifically comment on these points. Auditor to specifically comment and write this, that I have done this, I have done this. Why? Because when the auditor is giving the expression of an opinion in the audit of financial statements, so therein he is very generic. His statement is very generic. Yes or no? Tell me. His statement is very generic that entire books of accounts I have audited. Yes or no? Tell me. But what has gone behind that audit, except for the key audit matters wherein those are specified? Do you know that what has been done on PP, what has been done on inventory, whether their quantity was checked or not, whether their location was verified or not? Do you know that? Tell me. Will you get to know about it? Tell me. The answer is no. You will not get to know about it. But the lawmakers believe that is important for the auditor to specifically state. Why? Because it's a kind of additional responsibility which has been placed upon the auditor through this specific statement. That's why this additional requirement has been placed on the auditor in the form of another document, or you can say in the form of one requirement which is called as CARO. Understood? Understood? Why there is a need for CARO? What is CARO? Because I can see a lot of questions in between. Okay, wherein you are saying that CARO is a part of audit report, is a part of main report. So I'm hoping that you are now clear on this. What is CARO? The logic, the rationale around CARO? Yes, tell me. Yeah, clear? Everyone clear? Yeah. So similar to this first point that we just discussed, there are a lot of points that we are going to now discuss. And please remember, all of these points will be in respect of audit of financial statements of a company only. Means it will not happen that these points are in relation to something else. The answer is no. Why? Because over here, what is the context? What is the subject? Audit of financial statements. So that's why all of these things are in relation to audit of financial statements of a company. But still, you may be thinking, sir, why there is a need for this? Because this is a specific requirement over and above what auditor has written in his main report, in his audit report. Auditor is also required to write these points, and that's why I told you this is also a kind of checklist, that for all of these areas auditor will say that I have done this work, I have done this work, this is something I've checked, this is something I've checked. Or if there is anything which is not applicable to the company, auditor will say that this particular para, this particular requirement of caro is not applicable to the company. Okay. So he is very, very specific in terms of answering all of these requirements. Understood? Understood now about the Caro? Yeah. Any questions around Caro? Because now we'll move on. And in terms of our discussion, we'll keep only those pointers which are arising from Caro. Okay. Yeah. Okay. Now, next, auditor says company has a regular program of physical verification of PP. Yeah, which is done in a phased manner over a period of 3 years. In accordance with that program, certain PP were verified during the year. In our opinion, this periodicity of physical verification is reasonable with regard to the size of the company, nature of its assets, and no material discrepancies were noticed on such verification. Means this was again the requirement on the auditor to comment on physical verification of PPE. Okay. Then we are still on PPE because point number one is all about PPE and intangible asset. It says title deed of immovable properties, which are disclosed in the financial statements, means which are given in the schedule of PPE. They are held in the name of the company only. So now in this case, auditor is required to check that are there any such assets for which the title deeds are not in the name of the company. Yeah. So if title deed is not cleared, yeah. So this is again required to be commented upon. Okay. Further, he is saying company has not revalued PP or intangible assets during the year. So what is the requirement? Whether there was any revaluation. Then he is saying there are no proceedings. Now this is very, very important. There are no proceedings initiated or pending against the company for holding any Benami property. Okay, so can you see the extent to which the auditor is required to go to? Now, Benami property is not something which you will find in the books of accounts. Yes or no? But still, the auditor has been asked to specifically comment on that. So, how would the auditor will have to inquire from the management? Yeah, clear on this? Okay, so this is all about PPE and intangible assets over which the auditor is required to comment upon. Clear? Yeah. Any questions on this? Srini is asking, sir, can you please explain before and after introduction of Caro? I couldn't understand this question. What do you mean by before and after introduction of Caro? Any further questions? No? All right. Now, the second point. Now, second point means second requirement of Caro. So this is in respect of inventory. It says inventory has been physically verified. So this was required to be checked, correct? And then he says frequency of such verification is reasonable. Coverage was appropriate. Okay. No discrepancies were noticed on physical verification. So now physical verification of inventory as an auditor would have been performed. Why? Because existence assertion cannot be tested without this procedure. But still, when it comes to Caro, a specific comment on this procedure is required to be given by the auditor. Okay. Sainath is asking, as regards the Benami property, apart from asking questions, what other procedures you can do? See, other procedures could be in respect of other than inquiries, going through the minutes, okay, looking at some of the special purpose entities which they may be having, to go through their documents, to understand some of those requirements, to look at some of the properties wherein the title deeds are not clear as reasons. So this could be some of the procedures you can always look at. Okay. Hardik is saying MGT4, MGT5, BEN4, BEN5 forms which are filed by the company. See, as regards this MGT4, 5, BEN4, 5, see, all of these numbering, etc., I'm not aware of. Yeah, because it's all legal point. Yeah, and I'm sure many of you may not be aware of. So let's not get into that technicality. Yeah, let's try to understand that in principle some of the things that you can look at. But of course, if these documents like Hardik mentioned could be of relevance, of course you should go through that. And anyways, some of these documents will be available as a record of the company. So something which is a part of records of the company is easy for you to check. But Benami property is not something which the company will always form a part of its records. Otherwise, what is Benami in that? Isn't it? Yes or no? So it's not that easy for you to go and pick up. Yeah. Okay. Further, auditor has been asked to comment. Company has been sanctioned working capital limits in excess of 5 crore. Yeah. So he's saying company has not been sanctioned any working capital limit from the financial institutions. Okay. Further, he has been asked, company has made investments. Now we are on third point. And granted loans or advances in the nature of loans, whether those were unsecured to other parties during the year, in respect of which requisite information is as below. Okay, so this is all about loans, etc. Then he says, company has not made any investments, has not granted any loans or advances which are in the nature of loans unsecured to companies, firms, or LLPs. Company has not provided any guarantee or security or guarantee granted any loans or advances in the nature of loans. Okay. Now, if at all these are granted, they should be in compliance with the requirements of Companies Act. So that's the responsibility which is placed on the auditor. Okay. Now, as around this, let's see some of his comments. Pallavi is asking, sir, do we need to learn all of these points? No. I won't say you need to learn these points. Okay. And in fact, this is the question I was waiting for. What you need to understand is that some of these requirements are placed under CARO. Okay. Now, if let's suppose situation is given to you, which is in respect of any of these matters, so you should be able to comment on that. As an auditor, how will you comment on that under CARO? So that is here. That is the ask of you. As simple as that. Okay. Or even if a question requires you to say comment on some of the points, or say ask you as to what does this caro cover. So question may ask you maybe 3 4 requirements, not all the requirements. So caro has got a lot of requirements. Huh? So if you understand some of these requirements, some of these you'll always remember, but you don't need to just mug up in getting into mugging up all of these things. Huh? That is not required. Okay. Now, auditor is saying company has not given any loans advances. Okay. Company does not hold any investment in JV or associates. Company has given unsecured loans and unsecured advances, yeah, herein, to parties other than subsidiaries as listed below. Now it appears there's a list which he is giving. Yeah, so this is the list he is giving. So he's saying what are the guarantees, what are the securities, what are the loans, what are the advances in the nature of loans, and to whom they are given. Are they given to subsidiary, joint venture, associates? Nil. Others means other than these. Okay. And out of these amounts which were given during the year, what is the amount which was outstanding at the end of the year? Okay. So both of them you need to comment upon as an auditor. Understood? Yeah. Okay. Then he is required to comment upon investments which are made. Okay. So he's saying investments made and the terms and conditions of the loans advances, they are not prejudicial to the interest of the company. Okay. Then he is required to comment upon any interest-free loans, advances, repayment of principal, okay, whether the company was regular in repayment of principals or not, interest or not. Yeah, so he's saying yes, the company was regular in the repayment of principal as well as the interest. Yeah. Shini is asking, sir, is this a related party transaction requirement? No. See, related party transaction requirement is something which you see under financial statements. Over here, this transaction could be with related parties, which is required to be commented upon. But this is not the one which is in respect of related party only. Okay. Because over here, if you look at this table, others are also covered. Yes or no? So it says given to subsidiary, JV, associates, and others. Understood? Shrini, clear on this? Yeah? Okay. Now, moving further. Similarly, all of these requirements you can just flip through quickly. And I would advise you to just read some of these reports. Okay, even if you want to read these requirements in the study material, you should read that so that you will get the clarity, as to what has been asked from the auditor. So we are just checking as to what all auditor has done and what all he has commented upon. Then the auditor says there is no loan advance in the nature of loan granted falling due during the year, which has been renewed or extended, or fresh loans granted to settle the overdues. Yeah, so it should not happen that a loan was getting due, okay, which became overdue, and to repay that, another loan was given by the same bank or same institution. So auditor is saying there was no such situation. Okay. Then he's saying company has not granted any loans or advances in the nature of loans, either repayable on demand or without specifying any terms. Yeah, clear? So this third point was all about loans and advances. Now, moving on to fourth point. Okay, now we are on fourth point. In the fourth point, auditor is now commenting on loans, guarantee, or security as per the sections 185 and 186. Now that again you can just deep dive as to what do they require. So auditor is required to check the compliance of these two sections here. That's it. Okay. Yeah. Clear? Shri is asking, sir, Caro primarily discusses the balance sheet items only, right? Why not about revenue? See, we are not yet done. Shini. Okay. So let's get done. Fine. Fifth, now the auditor is required to comment upon acceptance of deposits or amounts which are deemed to be deposits. So he's saying there were none. Sixth, Now the auditor is required to comment upon maintenance of cost records. Okay. So if the company was required to maintain cost records, whether that has been done or not. Now, in this case, auditor is saying that this particular para is not applicable to the company. Can you read this sentence? Can you read this? Everyone, quickly. Can you read this? Yeah, everyone, please confirm. Auditor is saying, no, this is not applicable. Yeah. So now here again, you may be thinking, sir, if this is not applicable, then why is the auditor commenting upon it? Because it's a kind of checklist. So whether that is applicable or not, irrespective of that, auditor is required to comment on that. If that is not applicable, auditor will have to say it's not applicable. So that he cannot run away from his responsibility tomorrow saying that I've skipped. So he's now saying that I have checked it and it's not applicable. So tomorrow, if this is found applicable, then the auditor will be caught. Okay? Clear? Can you understand the importance of each and every para now? Yeah. And the way it is required to be answered by the auditor. Okay. Then it says company does not have any liability in respect of any statutory dues like service tax, excise duty, sales tax, VAT. Okay. Because these have been subsumed into GST. Further, he says in respect of undisputed statutory dues, means if there are any statutory dues over which company doesn't have any dispute, whether the company was regular in depositing that, auditor says yes. Okay. So if there were, let's suppose, some dues over which company didn't get into litigation, so, and company was depositing that regularly, so there were no delays. Okay. Now in this case, when the auditor uses this language have generally been regular. Can you see this sentence? Can you see these words have generally been regular? Everyone, quickly. When the auditor uses this language generally, it means during the year, some of the delays have taken place. But delays are not significant. Few delays were there. Yeah. Sometimes there were delays. If there is no delay, then he will not use the word generally. Understood? Yeah. So you need to be very, very careful. So that is how this language has been drafted. In fact, on this CARO, there is also a guidance note which has been issued by ICAI, which is running into 100 pages. Okay, so if you want to deep dive into this CARO, you can always go through that guidance note. Okay. Then he says there are no undisputed amounts in respect of statutory dues which were in arrears as at the balance sheet date for a period more than 6 months from the date they became payable. Okay. Because if there are any such statutory dues which are undisputed, means over which company doesn't have any dispute, but which the company has not paid for more than 6 months. So a table, a list of those dues is required to be given. Okay. Then further, he says there are no statutory dues which have not been deposited by the company except for the following. Okay. Now, see, the first requirement that we had was in respect of undisputed. Okay. Now, the second requirement is in respect of disputed statutory dues. Now, what do you mean by disputed? Say, income tax has raised a demand, but the company says, no, we don't agree to this. We want to get into the litigation. So, what will you call it as? Disputed statutory due. Okay. Now, some of these amounts company may have already recorded in the P&L. Company may have already recognized as provision taken to P&L also, but those are under dispute. Okay. Yeah. So now, in respect of those disputed statutory dues, this information is required to be given by the auditor. What is this information? Name of the statute, nature of the dues. So, Income Tax Act. It was related to income tax. Amount involved. To which period does this amount relate to? To which forum is this dispute going on? Means, is it at commissioner level? Is it at tribunal level? Is it at high court level? Is it at Supreme Court level? At what level this matter is pending? And if there are any remarks which the auditor wants to add, auditor can do that. Okay. Now you may be thinking, sir, this information belongs to the company. So why should the auditor provide this? Yes or no? Because you may be thinking, sir, all of this information, will it not be shown by the company in their financial statements under contingent liabilities? To which I would say some of them would have been done, some of them may not have been done. So you cannot always say that all of these would have been contingent liabilities. Why? Because if let's suppose there are any disputed amount which are under dispute, but company has created a provision for that anyways. So will that form part of contingent liability? No, that may have gone somewhere in the financial statements, in the P&L, maybe in the past 5 years this may have been recorded. But over here, all of those records, can you see these are all quite old? Huh? So we are looking at financial statements of 23, 24 right now. And this relates to 2006-7. This relates to 2011-12. This matter of sales tax relates to 95-96. Can you see this? Yeah. So all of these matters which are disputed, okay, they are required to be presented over here. Yeah. Clear? Clear on this? Clear on this, everyone? Any questions so far? Any questions so far? Quickly. Any questions? Any doubts so far? See, we are not yet done. Okay. So on Caro, there are more points to follow and we'll move on to that. But if you have any questions, any doubts so far, please let me know. Over to you. Any questions? Kasak is asking, sir, central tax, excise, they are not applicable now. Yes, they are not applicable. But if let's suppose when excise was there and that litigation is still continuing, so the company will have to continue with that. Huh? So that will not get dropped. Aditya says, sir, if the matters are satisfied next year, we should eliminate them. Of course, yes. See, only the matters which are relevant for that year for the company that will be covered. Sai is asking, sir, can we study any more financials of other companies also for exam preparation? See, Sai, I would say there are two things you can do. One, in your study material, all of these requirements are given. Okay. So like we are discussing all of these points, so alongside you can read these requirements in the study material so that you will get to know as to what does this CARO requires. Through this audit report also you'll get to know, but that you can read. So that is one. Second, till time you don't actually go through the audit report like we have been doing, you will not get the feeler. Huh? Okay. So that's why if you read the report alongside, maybe for other companies as well. So of course that will be a more of practice, which you can always do. Okay. Sainath is asking, sir, such detailed work can be done only through joint audit? No. So if you look at this company, this has been audited by a single auditor only. Yeah. Okay. And there are a lot of large companies which are audited by a single auditor. So this can be audited by the single auditor also. Okay. And auditors do this. So this is quite common. Yeah. So it requires a lot of efforts, but of course, this is done. Sai is asking, sir, I'm asking for other company reports. Yes, so that's what I told you. Huh? So you can always look at other companies' audit reports. So there's no harm in doing that. That will only help you. Of course, if you want, you can do that. And that is also good for your knowledge. So, of course, other than exam, that is good for your knowledge. Yeah, but you should not pick too many. Yeah? Maybe two to three should be good enough. So don't get into reading 10 reports or 20 reports. That much is not required. Okay? Clear? Yeah? Okay, so this Caro is quite interesting, isn't it? Yes or no? Quickly. Okay, so Bhavna is asking, sir, in joint audit, both the auditor work on the same areas in the same company or different company? No, so of course, when it comes to a joint audit, what is the understanding of joint audit? Joint audit means audit of a company jointly performed by two or more auditors. So, of course, it has to be one company only. Otherwise, what is joint there? There's nothing joint. Clear? Clear on this? Yes, quickly. Any more questions? Aditya is asking, sir, will you upload the notes and the audit report? See, all of these notes are getting uploaded, but the audit report I am not uploading because this audit report is something you just download any audit report you can pick up. There's no point uploading this bulky document unnecessarily, which you can go access anywhere. Okay. But of course, all of these notes are getting uploaded. Yeah. Okay. Any more questions around this? Then I'll move further on Karo. Yes, Tambeshwari. So some of these questions, like the question could be around what does this Caro require? To which type of companies Caro is applicable? Or maybe they will give you one situation on which you will be required to comment upon as an auditor, something that we have been doing. So these are the sort of questions you will be asked in the exam. Okay. And of course, we'll also look at some more questions. Bhavna is asking, but sir, in starting tells one audit the financial statements of A Limited. And no, so I think you didn't look at that part carefully. So there was one company, and for that one company, there were two audit firms. A and company was one audit firm, B and company was another audit. Okay, so that was the example we looked at. Clear? You can just go back, maybe relook at this. So all of these recordings, anyways, are available. So you can just go revise that. That will help you. Fine. Okay. Any more questions? Then we can just move further quickly, please. Yeah. Okay. So let me just move further now. Okay. So now moving on to the next point. Company has not surrendered or disclosed any transactions previously unrecorded as income in the tax assessment. So if there are any such incomes, that is something auditor is required to look at, check, and comment upon. Next, point number 9. Now this has got a lot of further requirements. So let's try to understand this. Company has not defaulted in repayment of loans or borrowings. Company has not been declared a willful defaulter by any bank or financial institution. Company has not obtained any term loans during the year. Okay, because if those were obtained, some of the requirements would have been applicable. So that's why he's saying because they didn't have any term loan. So that's why this clause is not applicable. Then he says no funds raised. Now this is important. No funds raised on short-term basis have been used for long-term purposes. Now, what is the requirement? So if let's suppose you use any short-term funds for long-term purposes, So it may be restricted by the lender. Similarly, if let's suppose any long-term loan is given, so maybe the lender has placed the restriction that this will be used only for that specific purpose. So auditor is commenting upon that the loans for the purposes for which they were obtained have been utilized for those purposes only. Okay. Okay. Now, further, he says company has not taken any funds from any entity or person or on account of or to meet obligations of its subsidiaries. Means it should not happen that company is taking a loan and repaying the loan of the subsidiary. So that should not happen. Yeah. Then he says company has not raised loans during the year on pledge of securities held in its subsidiaries. Yeah. Clear? Okay. Now, all of these are very, very important for the stakeholders. So, if you'll observe, some of these points are quite critical for the stakeholders. So, that's why they are important to be commented upon. Sai is asking, so do we have to give similar presentation as in the financial statements for related issues? See, I think I've clarified this point earlier also. To use the same language, to use exactly the same presentation is not going to be easy. Yeah, important thing is the thought process, the conceptual understanding that you should be able to present in an appropriate manner. Yeah, and in line with, or you can say as much as possible, you can just get closer to some of these things that we are studying. But if you just want to match that as it is, if you can do that, that will be great. But I believe if you start cramming all of these things, only then it will be possible, and which I do not really encourage. Huh? So you should always get into the conceptual understanding. Because if you get the conceptual understanding, you will be able to deal with all of these points in an appropriate manner. You can always put it across in your language. But of course, you should just go through this stuff over and over again. So your understanding will be developed. Okay. Yeah. So please understand, audit is all about practical knowledge. So it appears to be more of theory, but actually, this is not a theory subject. Actually, it's all practicals, isn't it? So if you'll just understand audit, some of these topics that you would have covered, I'm sure you would have seen that this is not all theory. There are a lot of application of various accounting standards, various legal requirements which come from anywhere else. Yeah, so that is something that you apply as an audit. Yes or no? So if you understand all of that, your audit is done. Yes or no? Everyone, tell me quickly. Yeah, any more questions? Quickly tell me any more questions? Over to you. Any more questions? Any more doubts if you have? Tell me quickly. Then I'll move on to the next point. No? All right. So let me just quickly to cover more points on. Though I believe we might not be able to complete this. So if we are left with anything, don't worry. I will cover that in the next session. And in the next session, anyways, we are going to start with a news chapter also. Okay. Next, point number 10. So it says company has not raised any money by way of initial public offer, IPO, or further public offer. Therefore, this clause is not applicable. Then it says company has not made any preferential allotment or private placement. Yeah, because if those were the case, then the company is also required to ensure that all of those proceeds are utilized in an appropriate manner. And auditor is also required to comment upon that. In the given case, because the company didn't come up with any IPO or any sort of private placement or any preferential allotment, so that's why these clauses auditor is saying not applicable. But how will the auditor get to know about it? When the auditor will go audit, look at all of these informations. Yes or no? Yeah, yes or no? Yeah. So I think there are some more clauses of this caro which we may not be able to complete. So maybe we can just stop here, and we can just move on to your questions and doubts if there are any, and the remaining part of the caro will cover in the next session. Okay. So over to you now. Any questions, any doubts that you may have, you may let me know, and then we'll close our discussion. Yes, over to you. Quickly. Okay, so then I think Shini is asking about SA 710. So I think you are talking about this comparative, corresponding, all of this information briefly. Okay, so now, see, in this case, you need to understand the comparatives first. And this is, I would say to a certain extent interlinked to various other auditing standards, and to a certain extent, sort of mixed up as well. Now, what is comparative? Comparative is your information which goes along with the current year's numbers. Now, in that respect, auditor has been placed some responsibility that auditor needs to ensure that comparative information has to be there. Auditor needs to perform procedures around that. So when you look at the financial statements, so does it form an important part of the financial statements or not? Tell me, what do you think? Yeah. So do you find that to be critical or not? That is an important part of the financial statements or not? Yes or no? Yeah. Always be the case, correct? Yeah. So that's why auditor has been has so this responsibility has been placed upon the auditor to look at those information as well, and to check that. Now, when the auditor will check that, auditor will move with an understanding that all of these things have already been covered by the previous auditor in the previous years, or by the same auditor in the previous years. Okay. So that's why he'll do maybe a sort of, ticking that previous numbers are carried forward as it is. Okay. So some sense check, or you can say a tracing he can do. But if let's suppose previously there were some modifications in respect of the previous year numbers. So on those areas, do the auditor need to be careful or not? Or if let's suppose previous year's figures were not audited, so will the auditor be careful around those numbers or not? Or if let's suppose if the previous year was, I think, not audited, we again spoke about it. Yeah, so therein this additional sort of responsibility arises on the part of the auditor. So I would say these are some of the things which you need to understand. She is asking, so of course it has to be 1 year only. Yeah, your year compare. Tambeshwari is asking, sir, page 8.76. Okay, so I think you are talking about the study material. Okay, just a minute. I think I'll have to go to the study material then. Just give me a minute. Okay, so you are saying page 8.76, second point A. So which page is this? This one, huh? So this one, huh? You are talking about this one. Okay, so this is the one that we talked about is in relation to inventory. So auditor is required to comment whether the inventory was physically verified during the year or not. Okay, whether that has been physically verified. Number one, its coverage, procedures of verification were appropriate or not. If there are any discrepancies of more than 10% or more in aggregate, means if let's suppose you go physically verify that, okay, say on raw material, what do you find in the books? This is 1 crore, but you go find that raw materials available only for 80 lakhs, 20 lakhs is missing. So there's a variation of 10% or more. So you are report that. Now, In this case, even though discrepancy talks about 10% or more, there could be some instances wherein this discrepancy is only 2% or say 1%. Still, this could be material for you. Yeah. So please remember, this point is only in the context of Caro reporting. But otherwise, also, this point is important for the audit. So that's how you should always analyze this. Understood? Yeah. Tameshwari, clear on this? Yeah. Okay. So, okay. Shini is asking, but in the audit report, 2 years statement stated as per the Companies Act, whether we can state more than 2 years in the audit report? No. So you don't do that. Huh? See, you report on the financial statements, which will have the comparatives. So that's how it will always be done. Okay. Ritika is asking, sir, once again, can you please explain pervasive? Is it just impacting the financial statement significantly? See, it's not only impacting the financial statement significantly. Pervasive means its impact is such that it's not only significant in relation to any one line item. So you can say two examples could fit this pervasive requirement. Maybe in the financial statements, majority of the items are misstated materially. So what will you say? My financial statements almost entirely are materially misstated. So that is something you will call as pervasive. Or you can say there are some areas, very few areas in the financial statements, but those areas comprise a significant proportion of the financial statements. And that's why if those areas are materially misstated, so the financial statements in a way will be materially misstated. So that's what you call as pervasive. Okay. Ritika, clear on this now? Yeah. Shini is asking, sir, for my curiosity, whether Caro mentioned. Yes, of course. Uh, See, the last, in fact, one of the items that we looked at, okay, in Caro, wherein we talked about some of these uh, undisputed statutory dues. Yes or no? So where do you have them? So these will all be going to the P&L. Yes or no? So I would say it's not necessarily limited to balance sheet. Of course, that will come out as a liability, but a corresponding P&L impact is also there. Yeah. So that's the point. Okay. So that's how you need to look at it. So Caro is not designed from the perspective of a balance sheet only. Caro is designed from the perspective of audit of certain areas of the financial statements. But please remember, that's not limited to balance sheet. That's in respect of financial statements. Okay, so that's how Caro has been structured. Understood? Okay, for example, even if we talk about inventory, so let's suppose inventory is there. Now, inventory will always have a corresponding impact. Change in stock that will go to P&L. Yes or no? Yeah. So that's why to say that this is only capturing the balance sheet item will not be appropriate. Okay. Yeah. So Karan is asking, what are these advances in the nature of loan? See, some of the advances could be there which may meet the definition of loan as per the requirement of Companies Act. And now, what are those advances? I don't think we don't need to get so deep dive into it, because that's where you'll just open up that legal requirement, because then you will end up getting into the Companies Act, which is not really the objective for you right now. Okay. Ritika is asking why Caro was introduced in 2020. Were there any matters specific to Corona? No. See, Caro has always been there. It's just that Caro was revised in this particular year, because there was a revision in this year when various clauses were added to this, and those were not specific to COVID. By chance, when the revision was taking place, this sort of COVID was there, and that's why this applicability also got delayed for some time. Yeah, but it has got nothing to do with COVID as such. Okay, so there's no such correlation between these two. Fine. Yeah, clear. Uh, Shini is asking, sir, my previous question was Caro. Yes, Caro was revised. So this latest one that you look at, so this got revised. Okay. Before that also there was Caro. Okay. And even there was one version which was earlier to that. So Caro, in fact, originally used to be called as Mao Caro. So if you go back, if you do Google, you can say history of Caro. You'll also find one term Mao Caro. Okay, so I think that's the origin. So that's what I remember. Okay, Shini, clear? Everyone now clear on this? Okay, so I think with this, we are not yet done. Huh? So I think some part of Caro is still left. And of course, we need to practice few questions around it, which we have not been able to do today. But anyways, we'll just, I think, hopefully quickly wrap up this sort of small part in the next session. And in the next session, we'll also start with the new chapter, chapter 9, which is about this audit of different types of entities. Okay, so that's the plan. Huh? All right. Okay, so thanks everyone for your time once again for this wonderful participation. Yeah, thanks so much. Merry Christmas, everyone. We'll meet day after, right? Thanks so much. Yes, over, Manish. Thanks.